Hello and welcome to the first full episode of Leyton's Expert Exchange podcast. I'm here today with Robert Strutt, Director of Tax for Leyton UK and Ireland. How are you, Rob?
Yeah, really good, thank you.
Good, good. Thank you for joining us for the first episode. So today we are starting our mini series on the R&D Corporation Tax Credit Scheme in Ireland, and we're hoping to give our listeners a really comprehensive overview of the scheme. So to start us off today, Rob, can you start by explaining what the R&D Corporation Tax Credit Scheme is and why it exists?
Yeah, absolutely. Ireland actually launched their R&D tax credit scheme way back in 2004, so one of the first countries to do so. And in principle, it's a sort of tax credit that's designed to reward companies that undertake sort of innovative and sort of technically challenging work. In principle, any sort of business that's a corporate tax paying entity can make a claim. But the main sort of criteria really on top of that is the fact that the work undertaken must be sort of really sort of clever, or what they sort of call a scientific or technological advancement. And actually, and the second main criteria is that in order to have achieved that advancement, you have to have taken some really sort of technically challenging work. So in principle, if you've got it right first time, it's probably not eligible. But actually, if you took sort of two or more attempts, then there's probably sort of some form of scope within that project to look at a tax credit scheme.
Fantastic. So you've really explained there, I guess, what kind of businesses and what kind of projects are eligible for the scheme. Why is it that Ireland decided to launch the scheme back in 2004?
I guess really as kind of in all sort of developed countries, really the sort of the key to sort of the sort of prosperity as such is sort of making sure that you're always sort of ahead of the game. And I think Ireland, just with a sort of general suite of packages, so it's sort of the sort of a competitive corporation tax rate and an R&D tax credit scheme. They sort of hope that all this would sort of attract companies and sort of multinationals into Ireland, so that they would be able to undertake sort of innovative and challenging work and sort of almost kind of keep Ireland at the edge and provide a real benefit for the economy. Interesting at a conference recently where they reckon that sort of for every R&D job sort of created, you actually created four sort of non-R&D jobs. So for example, the scientist in the lab develops a drug, and that sort of creates four jobs manufacturing the drug, which isn't necessarily deemed a sort of core R&D work. So that's why sort of a lot of countries have decided to sort of set up a scheme.
That's really interesting, and I think it's fair to say that Ireland really has become a hub for innovation, so that the scheme has had its desired effect, which is great. So, do you want to talk us through the main tax benefits and the rates associated with the R&D Corporation Tax Credit Scheme?
Absolutely. Currently the benefit is sort of 25% of your qualifying spend, but actually for accounting periods beginning on or after the 1st of January 24, that actually increases up to 30%. So it's a really generous scheme actually. Since the rate changed in the UK, actually the Irish scheme is significantly more competitive than the UK scheme. I guess the one sort of caveat with the Irish scheme is that the sort of credit's paid over like a 3-year period. So whereas in sort of the UK, if you're sort of claiming a tax credit, you sort of get it back in the year of spend. Actually in Ireland, it's all spread over sort of 3 years. If it's a smaller credit, you kind of get it all up front. But actually, if it's a much larger credit, then you get 50% in kind of the year of spend, 30% of your credit the year after that, and then in year three, sort of 20%. So in principle, if sort of companies are sort of making claims year on year, in year three, they're sort of getting all their sort of tax credit. But in principle, it's sort of spread over a 3-year period.
Fantastic. Like a really kind of longer term benefit, I guess, over those 3 years.
Absolutely, yeah. I mean, I think I'm assuming that the incentive is to make sure that companies do sort of continuously make claims and do also just continuously think about doing R&D in order to make sure you sort of maximizing your credit year on year, as opposed to sort of having like a one-off good year and then sort of dud years after that. It's sort of like to sort of try and incentivize that sort of year on year spend.
Absolutely, can understand that. So let's break down the cost categories. What types of costs are eligible for the R&D Corporation tax credit?
So the biggest one for any company will be your sort of internal staffing costs. So just to be a bit more specific on that, you've got your sort of the gross salary that you pay the individual, your sort of employer PRSI amounts, your health insurance payments, and also your employer pension costs. As part of gross salary, it's also any bonuses as well. So if you pay someone like a year-end bonus or bonus towards their R&D costs, you can include that cost as well. Um, I suppose just to confirm, with all of these costs, it's not kind of it sort of is all the cost, but you only claim the portion spent on R&D. So if an individual's only spent 25% of the time on R&D, you can only include 25% of their costs. You can't sort of claim all the cost of that employee. It's just specifically the R&D amounts. You've then got your sort of overheads and rental costs, materials, subcontractors, agency workers, sort of cloud computing costs, and also something that's quite generous as well is your sort of plant and machinery and any sort of capex spend towards R&D as well. So it's quite a broad range of costs that you can actually include in your claim. I guess just to sort of pick up on the subcontractor point though, there are some caveats to that. So interestingly, in order to stop sort of two companies making a claim on the same cost, if you want to include a subcontractor cost, you need to have notified them before that invoice is settled that you're going to include that cost in your R&D tax credits claim. So that can either be in like your statement to work or even just sort of an email before you settle their invoice. So it's worth bearing in mind that probably actually if you're new to the scheme, you're probably going to miss out on your subcontracting costs for kind of 2 years. But actually it's something that actually we can kind of work with you and look at moving forwards. Having said that, if your subcontractor is a non-corporate tax-paying body, an individual, an overseas entity, or like a university, then actually you don't have to sort of necessarily notify them in advance of setting their invoice. So yeah, it's very complicated, subcontractors. I mean, it's actually really good because actually it's a really simple way of defining who should be making the claim on that sort of qualifying spend. So it is a really excellent way of solving that problem. But yeah, it probably does mean that actually for your first couple of years of claiming, you're probably going to miss out on that cost. But again, that's something that, you know, we can work with you to kind of set up for to make sure you're sort of maximizing that benefit moving forwards.
Yeah, as you've said, it does sound like there's a lot of nuance and complications to it, which if someone maybe hasn't claimed before or it has been, I mean, not privy to what goes into making a claim and what they can claim on, it can be quite complicated. So would you say that that subcontractor piece is maybe the biggest bit of confusion, or out of the cost categories, where do you think people maybe tend to get it wrong?
Yeah, definitely. I mean, it's really interesting actually. So there's some subtleties such as for example, like your overheads, your light and heat, you can claim as kind of a proportion of the cost. So for example, you can say take your R&D staffing cost divided by your total staff cost and claim that proportion of light and heat cost. But for example, like rent and sort of cloud computing costs, the cost has to be sort of exclusively incurred for the purpose of R&D. So if you know you sort of your R&D staffing cost divided by your total staffing cost is 30%, you can include like 30% of your light and heat. But actually, you can't then do the same for like your rental cost. It has to be specifically like an R&D lab that's being paid for, so you'd sort of include 100% of that cost. So there are other sort of quirks around that, and say like cloud computing costs, which also provides some sort of subtle nuances as well. But yeah, definitely with subcontractors, because I think that's much more of an audit trail, as sort of like a process really that needs to be set up within in-house in company to sort of make that claim suitable going forwards. Whereas I think things like kind of rental and cloud costs are probably much more sort of black and white in current and future periods, whereas I think something like subcontractor cost is something that's probably a no for now, but can be yes in future, as long as you sort of really sort of engage in the R&D process and
Yeah.
and get your sort of audit trail and documentation in place.
Yeah, beginning to learn how the scheme can work for you, and then being able to work backwards almost and do the foundation work that lets you maximize the claim in the future.
Absolutely, yeah. I mean, I think one of the things with the Irish scheme is that it's very sort of audit trail driven, which is an excellent thing, because actually it's a fantastic way to make sure that only companies that should be claiming are claiming. But yeah, just in terms of setting out that audit trail purposes, I mean, I'm assuming if you're not claiming, you're not sending out emails saying I'm going to include this in the claim. I'm assuming you're not jumping the gun like that. But it's certainly one of those things to sort of look at as well going forward, which is great. Just to pull back on the sort of the plant machinery and capex costs as well, actually it's great as well that actually the scheme also allows you to sort of claim capital allowances and R&D on sort of the same cost. If you are buying plant machinery or sort of capital items or sort of building and structures in relation to R&D as well, you can also include those as in your R&D claim as on top of capital allowances as well. So it's actually great as well. So it's really sort of a huge incentive for companies to sort of work with us as well. And we have a capital allowances team in house as well who can sort of help sort of maximize that part of your claim as well.
Yeah, it does sound like there's a whole host of different benefits, and I think we've done hopefully quite a good job of covering off those benefits quite comprehensively there, Rob. Thank you for that. we've also mentioned the complexities. So you mentioned there the importance of having a solid audit trail and backing up with documentation. Do you want to sort of elaborate on that in a little bit? Why is that so important with the Irish scheme?
Yeah, so the Irish revenue pay sort of great credence to sort of making sure that the R&D has, I say has happened. That might sound a bit obvious, but almost like there needs to be sort of an audit trail that the activities you're claiming on have occurred in that accounting period. So actually, there's definitely sort of a huge emphasis on, do you have project documentation in place? Do you have sort of, quarterly, sort of like quarterly reports, or sort of, almost like as you present to a client, this is what I've done this quarter. This was what was great about what we've done. This was clever, sort of complicated, and how we overcome it. So there needs to be that sort of strong underlying sort of documentation audit trail to show that sort of what you've done has taken place. And so, and actually, in some ways, that's a huge benefit to companies as well, because it means that actually when we come and look at it, we can sort of identify this audit trail. And actually, we found that actually with a lot of companies, kind of that sort of basic audit trail is actually what we need to sort of do the claim for you. So actually, we can sort of spend less time kind of getting in your way, talking to you for hours and hours to try and sort of pick out the information we need. It turns out probably a lot of that information is probably in a lot of the documentation you sort of keep in house. So, and likewise on the cost side of the claim as well, you've got sort of timesheet. A lot of companies have sort of got timesheets as well, although timesheets aren't strictly speaking necessary. If you've got timesheets, this sort of gives us a starting point. Say, well, clearly these individuals worked in this project. This is what their timesheet says, and then we can sort of work with you to try and sort of apportion that time further for sort of the R&D time of the project. So it's really important to kind of have that sort of technical sort of project documentation, which shows the work you've undertaken and when it occurred, and also if you can then back that up with sort of timesheets and sort of, or potentially just sort of other evidence that this work's taking place, so invoices to subcontractors, etc., etc., etc. Then that sort of allows you to sort of really sort of, that sort of gives you sort of like your base level that will allow you to sort of submit that R&D tax credit claim to the revenue, and then where we can sort of come in and sort of help pull that documentation apart, and then sort of extract the main narratives that the revenue want to see in a report. So therefore, when you're submitting your claim, we're giving the revenue a full report up front, and actually the report will cover every single project. So we don't just sort of write up one case. If you've got 10 projects, we write out all 10 projects. We don't just sort of submit one case study and then sort of leave the rest of the imagination. We do actually are fully upfront with the revenue, and so therefore we will sort of use all those documents to write up all the projects, pull together your report, and then we can sort of give the revenue a sort of a cost by cost breakdown of the project on a per project basis, and also sort of the technical narrative that they are looking for as well.
Yeah, I know there's a lot of, or there has been a lot of nervousness, I guess, from companies within Ireland to claim on the R&D corporation tax credit scheme, and I guess that the requirement for such a solid audit trail and for a lot of documentation is part of that. It's a nervousness, I guess, to get it wrong, but also it's very, very time consuming. So how can working with a specialist like Leyton, I guess, make that much simpler and compliant process for clients?
Yeah, I mean, I guess sort of going back to the definition, I mean, it's a case of, the sort of term of what is an advancement, what is an uncertainty is always very sort of like scary, because actually, who knows? I mean, in reality, I think whenever people discuss R&D, there's always sort of the sort of people always assume it's just sort of like the blue sky thinking, as opposed to actually just the everyday challenges of doing a job in unique circumstances or challenging circumstances. So even as we sort of mentioned before, it's you're trying to push the boundaries to create the R&D jobs to then create the non-R&D jobs. And so in reality, I think a lot of high performance people work in these areas, and they just sort of think that naturally their job is just to do these things, as opposed to, well, actually this is what we are trying to reward. Like actually these are the sort of the high skilled jobs that people want to reward, and it's about attracting that investment into Ireland. So this is why working with a specialist like us, it sort of takes away some of the mystery around it, because actually it's almost that thing, if you submit a report, someone in the background says tick, and you then get a tax credit for it, and actually no one sort of really knows what happens in that middle. So therefore actually working with an advisor who knows how to sort of draft the reports, pull the necessary information, because again, you don't particularly just want to send off 10 PDFs of like quarterly reports, because actually that's not what the revenue want to receive. They just want to actually just know sort of the headlines and then get a bit of the detail that sits underneath that. So working with us and our experience, we know how to sort of work with your information, use that to draft the narrative, so that actually we're not submitting waffle to revenue. So it looks, again, so it doesn't look like we're just trying to bury them in information. We know how to pull apart the sort of the information they need, which hopefully then sort of makes the process much more straightforward.
Yeah. And I think that's such an important point is, it's not about bombarding in technical information. It's about being able to paint a picture and explain a story of the R&D that was undertaken by the business. I think potentially something else that might be worth calling out, Robin, and you can expand on this, is working with someone like Leyton who has experience working with businesses across a range of industries that aren't maybe technically just very well known for or seen as R&D industries. So do you want to, I guess, expand on the work that we've maybe been doing in Ireland already that has fallen into maybe non-traditional R&D sectors?
So yeah, I mean, we work with a lot of engineering clients, so sort of construction, engineering consultants, architects. Again, so these are not, for want of a better expression, sort of like lab coat industries, but actually they're still industries where actually if people kind of knew what they were doing, it would seem incredible. I think certainly with there's sort of probably the sort of lazy sort of one with construction where just building a building, whereas actually you're trying to make that building more sustainable. You're trying to sort of make the energy efficiency, and also just trying to build in sort of like unique environments or difficult environments. Therefore, actually, just what's almost been done before just isn't suitable or applicable. Therefore, actually, you are sort of doing work whereby actually, if you produce a sort of an academic paper on it afterwards, a sort of a hypothetical academic paper afterwards, actually everyone in the industry would read it because they'd actually love to know what you did to make that happen. So it's that sort of, and I was going to say, it's worth mentioning that in reality, you're not part of the R&D tax credit scheme isn't about producing academic papers. You're not giving away your trade secrets. The only people who know what you've done is yourself, us, and obviously we'll have non-disclosure agreements in place. And again, the revenue aren't going to share this information. So there's no need to share your innovation with the outside world. But it's just, in reality, if what you've done is something that your competitors would be envious of, then actually that's something that'd be very applicable for the scheme. So it's definitely worth sort of trying to think of it more in that sort of in that sphere of actually you don't have to produce the academic papers. It's not about producing academic papers. It's just actually is what you've done something that would be sort of quite envied by your competitors. Like your competitors would love to know how you did that, because actually what you've done is giving yourself an edge over your competitors.
Yeah, that's such a simple way to think about it, but I think it really does fit. Um, Fantastic, Rob. I think that's been a really comprehensive overview. Is there anything else that you feel you'd want to call out that we haven't covered off yet?
Um, I was going to say, I guess just to summarise, I think certainly um, with with Ireland, I mean, if you look at sort of the sort of competitive index, I mean, certainly the private sector is absolutely flourishing at the moment. Like you're attracting got incredible universities and got incredible companies who are desperate to set up offices in Ireland to sort of try and tap into that talent pool. And actually sort of don't get sort of lost in the fact that actually you're all doing something clever. Like in reality, if you're all doing something clever, you're probably all eligible to make a claim. Now in reality, it's don't necessarily focus on sort of the whole project, because actually it may be a case of actually 80% of a whole project not eligible, but actually we're looking for that kind of 20% of that project that maybe is eligible. So it's about focusing on those sort of an expression I've heard is the bubbles of R&D. Actually, did you come across something where you had to come up with a sort of non-conventional solution, or did you plan for something to take a month to resolve but actually took 6 months? That's kind of where you should really be looking. And again, we're always happy to talk to people. We're sort of quite nerdy, for want of an expression. Like actually we love to hear what you do. Like actually in reality, a conversation with us, just we're happy there to brainstorm. If it doesn't qualify, that's absolutely fine. We don't submit it. We're not there to sort of push through things that aren't legitimate. It's just actually if there is something that you are doing that is very clever and innovative, it is worth looking into the scheme, because actually getting sort of 25 moving up to 30% for your project cost backs all of a sudden is a real benefit. Like it's quite a good way of sort of getting some money back into the business, and also means that actually it allows you to kind of explore risks even further, because actually you're not necessarily worried of, oh, what if this goes wrong? Well, actually if you get 30% of your cost back, then actually you are having your R&D tax credits and even just your R&D work sort of subsidized. So actually it is worth looking into, because actually it sort of makes the cost of R&D much reduced, which is certainly something which I think sort of all companies would benefit from.
Massively. So if we have any partners listening who have clients that are working in a space that they feel might be R&D, or if we have any prospective clients listening who maybe in the past have been told that something doesn't qualify, that maybe the area they work in doesn't qualify, or they're not too sure they've got something they want to run past us, we're very open to a conversation about that. Sounds like, Rob.
Absolutely, yeah. I mean, I was going to say, I mean, in reality, it's the aim is to be mutually beneficial. So in reality, we don't want to raise our profile in front of the revenue. We want to always sort of put forward the best case scenarios for companies and for the revenue. So yeah, I mean, it's definitely worth a conversation. If you feel this is something that you can benefit from, I mean, as I said before, like 25 to 30% of your R&D costs back is quite a big sort of investment in the business, and actually will allow you to sort of continue to do that good R&D work. And again, as we've said before, there are certain things, certainly with subcontractor costs, whereby actually, if you are going to miss out in the first 2 years, we can certainly help to ensure that you're sort of claiming those costs in future years. So again, we are in this for like a long-term partnership. We do want to spend, the next however long working with you to put your tax credit, R&D tax credit claims forward. So yeah, we would certainly love to sort of work with companies, and just even if it's just initial exploratory conversation, that'd be great.
Yeah, absolutely. It sounds like companies would have a lot to learn from, like, even just a brief conversation about the process and understanding that a little bit better. And hopefully, this conversation stimulated some thoughts with people as well. Thank you so much, Rob. It's been an absolute pleasure to have you on for the first episode. Hopefully, our listeners are going to have got a lot from that. So I think if you have nothing else left to say, I think we'll wrap it up there.
No, I think it's all good for me. Thank you very much for your time. Really appreciate it.
Thanks, Rob. We're going to be back in a month's time with our second episode in our Irish mini series. Until then, thank you for listening. This has been Leyton's Expert Exchange podcast.